The ASEAN region should be on the investor radar screen for three key reasons. The first is that there are several structural reasons to be optimistic about ASEAN, given its population size, its growth rates, and its trade patterns. The second reason is that the ASEAN region is broadly unloved. Investors for some time now have been focused more on North Asia, and partly as a result of the trade tension between the US and China, they're going to focus more attention on other opportunities in the region, for example, ASEAN. And the third reason to be optimistic about ASEAN is that actually, as an asset class, it's much less volatile than many people realize. The ASEAN market is less volatile than the Brazilian and Russian markets, which may not be a surprise. It's less volatile than Germany. It's less volatile than Hong Kong. It's less volatile than Europe. And so as part of a diversified portfolio, you get the benefit of a really interesting longer-term growth story, but with less volatility than many people imagine. Inevitably, there are headwinds facing the global economy at the moment, whether it's slowing growth in China, questions around interest rates, or the trade tension, which is a common thread through this conversation. However, we think that the ASEAN outlook is really quite well underwritten, and that's because of the size of the population. So ASEAN already is the world's third biggest population center. The size of its economies. ASEAN already is the world's sixth biggest economy in aggregate, up from 10 just a few years ago and on a path to get to fourth within the next decade or so. And ASEAN also is a beneficiary of the trade tension between the US and China, which means that we are seeing more effective trade patterns within the region and a shift of FDI from North to South Asia. Let's zoom in on two particular investment themes, illustrating each one with an individual country. So the first is tourism. Although ASEAN makes up just 3.5% of the global economy, it makes up 9% of all tourist arrivals. And 3 of the top 10 most visited cities in the world are in ASEAN. Bangkok is top of the list. Now, if we look at the direct impact of tourism on the Thai economy, it's in double digits. But if you go to the indirect impact, it's over 20%. And that's because not only do people arrive and spend money on accommodation and on F&B, but there's the trickle-down effect onto transportation, consumption patterns more broadly, etc. This will continue. ASEAN is the world's fastest growing tourist destination. The second theme to drill down into is infrastructure. Now, on the face of it, infrastructure is much less exciting than tourism. But actually, it's utterly essential. The business of getting goods and people from A to B is the oil which greases the wheels of the global economy. Unfortunately, for some time, ASEAN in general had lagged in terms of infrastructure build-out, compared, for example, to China. However, the Jokowi administration in Indonesia has made great strides forward in improving build on toll roads and associated projects. And this should be a really important force underwriting the ongoing development of the ASEAN economies. Let's divide the answer into two parts. The first is economic. Already, what we were seeing is that more investment was taking place in Southeast Asia at the margin because the workforce there is cheaper than in China. The flip side of China's economic miracle is that very rapidly its workers have become more expensive and it's become cheaper to manufacture goods elsewhere in the region. Now, that was happening anyway, but we think that the trade tension between the US and China has accelerated the process. And even if we get a short-term resolution between the two countries, any chief executive who is planning capex will continue adding at the margin in ASEAN where they can feel more secure. The second part of the answer is in portfolio terms. We think that the trade tension has acted as a catalyst to draw investor attention away from North Asia, where they've been looking for several years, and look more closely at Southeast Asia, which has been a somewhat unloved asset class for the last 6 or 7 years, but as mentioned, has got many attractions going for it and is looking relatively good value. My advice for investors looking to diversify into ASEAN equities is to be very selective. You need to invest via a team which has got the right resources and the right experience just to pick the best stocks. For all that the ASEAN story is an exciting one, you don't want to buy everything. You just want to buy the best franchises with the best management teams, the best ability to execute, and also with the right corporate governance so they will respect minority shareholder rights. So you need to go with experts and you need to just pick the best. Beyond that, of course, I would advise you to diversify. And one of the beauties of the ASEAN asset class is it is a diversified asset class because it consists of several different countries. And I would also advise you to be a long-term investor because for any equity that you choose to invest in, it's important to take a long view and not worry too much about trading.